From our perspective in the central bank, we have indicated in various ways, in most recently in an op-ed piece that we circulated widely, the concerns that interest rates, that this issue raises, and that interest rates need to come down. We also asked banks, commercial banks, to make a credible down payment, and also emphasize that further action needs to be pursued so as to lower interest rates in a sustainable way. From our perspective, we want to again emphasize that this is a day for the commercial banks to speak with you, the press, other influencers, and indeed the general public in this press conference, to speak with you on the down payment and commitment to continued reduction in the interest rates. It's not just the banks. The banks have to do better on that. I think there has been specific concerns on the use of credit scores, as was mentioned just now by Raman and Duncan actually earlier. The issue is that the banks themselves are the only ones that have to deal with this. No, they need to use the information. But I think the creation of the information, that's where we need to do a lot more work from our perspective as the regulators. As you know, the credit reference bureaus are also part of our domain of regulation in the central bank. So there are some things we need to improve there. The point has been made before that banks only provide negative information to the credit reference bureaus. Remember, at the end of the day, the credit reference bureaus are just recipients of information, and they just collate the information together. It's not that they are creating information. Okay, so the point here is that if banks only report when things are getting worse, in a sense to punish you as a consumer, and do not report when things improve, meaning when you have you make your payments quickly or whatever else it is, then the whole framework falls apart. The direction for sure is clear. It's the right one. And I'm pretty sure all of us understand that and this is what we expected. Consumers expected the moment CBR moved by 100 basis points, as it did, they are to be felt directly in their pocket by 100 basis points. So I think the direction, this is something that is clear, and I think we should appreciate it for what it is. There's a lot that can be done within the current legal framework, okay? So this is something that requires a certain commitment, as the banks have now committed to doing certain things. I don't think, as a customer, what I want to see is a new legal document that tells me that my interest rate will come down by 100 basis points. That is of no consequence to me. What is of consequence to me is actually seeing that, the materialization of that. So I think the point here is that why it is being brought out in this way, why we insisted on seeing something in writing, is precisely because we want to have it monitorable. So yes, what is it that you're committing to? What are the banks committing to, and how can we enhance it as time goes by? Nothing is static. So in that sense, if we don't know where we are starting from, we will fail